principles for a new emerging world order in terms of the judicial system? Well, as luck would have it, everybody's talking about judges now and how important they are. And, it's important that we have judges who are fair arbitrators, regardless of their political opinions or affiliations. They're just fair arbitrators. That's really what you want to look for in a judge. So, kudos to people for taking heed of that. Yeah. And believe you me, we have some superbly good judges, and we have some horrible judges. Now, as citizens, we're the final judge of who we think are good and bad judges. So that's why a lot of judges are on our ballots. People don't know this, but that's why it's important to vote the entire ballot, because you might see some judges on there. It's important. Anyhow, we wanted to talk about another institution of, well, equal magnitude in nature, and that would be the banking institutions, the banks. Some people say this is the financial sector, but I don't want to talk about the complete and utter totality of the financial sector, just our banking system. And so this is really principles for a new kind of emerging world order in terms of our banking system. Many of us, myself included, we had bank accounts when we were very, very young. Now, in my case, I had a bank account. My first bank account was when I was a freshman at university. Yeah, first year of university. And, that's like 17, 18, 19 years of age. Now, think about it. Suppose you bank with the same institution since you opened a bank account. Now, your institution, your financial institution, generally speaking, not always, they've had some hiccups along the way, but generally speaking, your financial institution where you bank with, they make record profits, the institutions. I'm thinking of big ones in the United States, but you can extrapolate this globally. Wells Fargo, JP Morgan Chase, Citibank, Bank of America. These financial institutions, they make record profits year after year after year. However, we as the customers who house our hard-earned capital in their institution, we might not see any of those profits passed down to us. It's possible, but it's highly unlikely just for having an account with these financial institutions. It rarely ever happens. What are we, like maybe 2 to 3% interest per year on our money in these accounts? Just completely atrocious, I'm telling you. Now, these are not things that are currently happening, but we're talking in terms of future. So these are things that we want to see happen, and that other people, probably younger people, will implement down the road. So, one thing in terms of how a lot of these financial institutions get let off the hook is because you all always do sort of kind of the same thing. You're highly critical of them, which is fair. It's simple enough to be critical of their practices. I mean, a lot of their practices are not, we'll leave it at that. But we very rarely ever have any constructive feedback concerning what we actually would like these financial institutions to do for us as customers. Some people work for these financial institutions as employees. What is it that you all would like to, constructively provide feedback for them to do? So I was musing this, a while back, and I thought of a couple of things I personally would like to see these financial institutions start doing for us, you know, down the road. I don't expect these current individuals who are CEOs, shareholders, board members, I don't expect this crop of folks to do anything different. You know, the old saying is so true. You can't teach an old dog new tricks. So I don't expect this current crop to do anything different. But this is for the future. When Gen Z starts, owning banks, creating banks, this is for you to take note and maybe possibly do these things. Now, let's start off with the hard-hitting truth about the financial institutions, our banks. You know, a lot of times people say the financial institutions, our banking system, it's in trouble because of the practices that they do. And they talk about, how they gamble with our money, this, that, and the other. You've heard it. And that might be a fair-minded critique, but it's not the reason I truly believe our financial institutions are in as much trouble as they are. No. It's something a lot more simplistic in nature. You know, it's a lack of valuing the customer. Yeah, it's a lack of valuing you all. That's really why they're in all of this trouble that they're in. They don't know this yet, but I'm going to explain in quite some detail. But when you don't value your customer, you know, customers start to have a negative opinion about you as an institution. Then they don't, trust you that much. And all types of things after that ripple out from that. So it all really goes back to these financial institutions not valuing their customers. So that's really, in essence, what I'm going to talk about. Ways that these financial institutions in a new emerging world can start valuing their customers again. Yeah. You heard the whole saying, do right by your customer. Yeah. These financial institutions, they're not doing right by us as customers. We all know that. And they all know that they could probably do better. They just probably don't know how to. That's why this is going to be extremely helpful, because we're going to spell it out in great detail. That way they can't, feign ignorance after the fact. Yeah. One of the biggest problems I have right now, and this is completely ridiculous, it's just been allowed to happen. Nobody's talking about it, acting as though they don't know that it's happening. But if it's happening to me, it's happening to everyone else. You all, do you know what I'm talking about? Say, for instance, you have a credit card with your financial institution, Bank of America, Wells Fargo, Chase, Citibank, you name the bank. Now you have a credit card and you have a balance on your credit. Maybe you owe the bank or your financial institution $2,000, $3,000, $4,000, however much you've run a balance. Currently, I'm personally close to paying nearly 30% APR interest on my credit card. This is ridiculous, you all. This is straight up robbery. That's what it is. 30, it's like 28.99% APR on one credit card. Yeah, close to 30%. 5 and above, you round up. So I'm paying nearly 30% interest, annual percent in interest on one credit card for one bank. This is not okay. This is not okay at all. And you know, there's no real reason for them to get away with this. Besides, you all don't complain in mass about the things that are important. You let them off the hook. And you don't demand that something be done to remedy this kind of theft. This is straight up theft. That's what I look at it as. 30% APR on one credit card? No. This is thievery at its highest level. These financial institutions are completely stealing from us. Just raking us over the coals. Yeah. So, I can only say what I would do if I had a financial bank, if I controlled a bank, you know. Because you gotta think, J.P. Morgan, when he first set out to start Chase, you know, this was a man who was a visionary, invested very early on in American steel, kept that American steel so cars could be made a fortune off of that, bought silver, invested in silver, and then that popped, and then he bought the bank, right? Very visionary in terms of investment capital, okay? He was very risky. And for all intents and purposes, while this individual was a robber baron during that time period, he cared about the people when he opened Chase. Now, you know, after so long, these institutions that we have, all of them start to, you know, lose their way. If nothing comes along to course correct them. Yeah. And sadly, while people just criticize, they never offer constructive feedback. And you know, I would hate to be the one that criticizes and doesn't offer constructive feedback. So I always come prepared. In terms of the APR for credit cards, I think it should be capped. They shouldn't be able to charge us any more than 10% APR interest on our credit cards. That's the maximum they should be allowed to charge us. 10%. They can charge less, but they can't charge any more than 10%. Now you start charging more than 10%, that's when it becomes usury. And there used to be laws, usury laws. But see, you all allowed them to play fast and loose with those type of laws. Yeah. Everybody talks about they want to go back to certain time periods, but they never talk about usury laws and how these financial institutions are currently abusing it. I won't say they're breaking it, but they're abusing the usury laws big time. 30%? I couldn't believe it. Yeah, 30%. 30%. And it's not just me complaining about this. A lot of folks are complaining about this. Yeah, 30% APR interest on your credit cards. Completely crazy. And then that's why there's record credit card delinquencies present day. People can't afford to pay 30%. It's ridiculous. Completely ridiculous. Now, I'm not going to say or give you all any type of financial advice concerning that in general, because, you know, folks who used to teach certain things about that kind of thing, well, strange situations happen to them. You go and look into it. Some folks that are still around, they know what I'm talking about. So I'm not going to tell you all anything about what to do about that, but I am going to tell you we need to all push no more than 10% APR on our credit cards. that our financial institutions can charge us. They shouldn't be allowed to charge us any more than 10. 30% is crazy. Yeah, that's crazy. That's insane. I couldn't believe it. Yeah. And people, for the most part, they're not saying anything about this. You look on the internet, you see a lot of videos being made about people being charged 30% APR on their credit card. I don't. Although most people are receiving these kinds of things. And yet nobody's saying anything about it. 10%. That's it. No more, no less. 10%. Anything above that, it's like, really we should have pitchforks and torches out. Anything above 10%. And we're talking now currently 30%. So you all, I don't know what to tell you. And here's another thing. Okay. So, you know how you can show that you value a customer, especially if they've been a long-time customer for you? Well, you can cut them in on your record profits. Well, you should be allowed to. Now, I don't know if this goes against financial regulations that they have set up currently, but anything they want, these financial institutions, if they go to DC and lobby the politicians, they usually can get it. So I say that to say this. If they wanted to help you all, they could. I don't know if they're wanting to do it. Because anything else they want, they go and lobby. And generally speaking, they get it. In terms of when they want to help us, we never really see them lobbying on our behalf, even though we invest our capital in their institutions. It's the weirdest thing, I'm telling you. So, using myself as an example, I told you when I first entered uni, I opened up my first bank account. Now I think about that, from that time to now, man, that's decades have passed. And think about it. I bank with one of the largest banks in the country. They make record profit year after year. And I haven't received any of that profit. Although, wait for it, they use our money. Yeah, they gamble with our money. Do all these risky bets. Sometimes they pay off, sometimes they don't. But on the whole, these financial institutions, whether they lose money or make money, they're always bailed out. They're never hurting for a penny. And yet we haven't seen any of these profits over the years when we bank with them. Now, do you think that's really valuing your customer? I don't think so. Now, I have a way to kind of change this, where they could show us an infinitesimal amount of value for what we provide them. Because after all, without our money being in the banks, you couldn't gamble with it. Therefore, you couldn't make record profits. So you need us. We don't necessarily need you. Yeah. See, when you put it to folks that way, then they start to understand. You just got to tell them that. Now, anyhow, you all, I was thinking, one way they can show us a tiny piece of how they appreciate the value we provide them is by cutting us in on some of their record profits. Now, this is a small, tiny act that they could do, and it would go a big way towards us as customers. My thought was this: one share of stock per month, per customer, if you have an open account with any publicly traded financial institution. Now that's a mouthful, so let me break it down for you. Basically, if you bank with Bank of America, because they're a publicly traded financial institution, all customers should receive one share of their stock per month, per customer, for as long as you bank with that bank. Yeah, think about it. Just one share of Bank of America per month, as long as you've got an account open with them. Now, you say that's not a lot. Actually, you got to think, how many people open up accounts like me when you're at your first year of university? And then that's decades to go by. Most people don't switch banks like they switch, states and switch relationships. Most people, they're bank with their same bank for years and years and years. So there's 12 months in a year. Say you bank with someone for 10 years. You do the math. 12 times 10. That's 120 shares of stock with, say, Bank of America. Now you no longer want to bank with Bank of America. You still can keep their shares. And then you can go to another bank like Citibank. The same process repeats. They give you one share per customer per month. And those shares, they appreciate in value. So you could choose to sell them. You could choose to hold on to them. You could do whatever you want. But you would be in some way being considered a value-based customer for an institution that makes trillions and trillions of dollars. And they never share any of that value with us. This is very simple, very easy, and it's not rooted in any type of ideology. They can't say it's communism. They can't say it's socialism. They can't really say it's capitalism because they don't practice anything like this. But it's like profit sharing. Yeah, that's it. And it's a tiny amount of profit sharing. One share. Now, they'll go and start screaming and hollering. Why is that? Because it'll be helpful to you all. And I don't think many of them want to help the average customer, which is crazy. Yeah. One share. Now think about that. You've been banking with somebody for a decade. And your interest that you get paid on your money that's in your account maybe like 2% per year. That's maybe like $1 or $2 per year you make. Here you have one share. Say Bank of America is trading for, I'm just going to throw out a number, $24 a share. Right there, that one share is more than you'll receive the whole year in interest, just owning that one share. And you get one share per month, per customer. Yeah. This would be quite impressive if they did something like this. Yeah. It'd be showing that they value their customers again. Yeah. We haven't seen these financial banking institutions value their customers in forever. These are steps in terms of how they can do it. Now, will they do it? You all know they rarely ever listen to anything that's, decent for the citizenry. But who knows? These are emerging principles. So it doesn't necessarily have to be done right now, but in the future it should be. Maybe when these folks are not controlling everything. Who knows? They're currently giving about 2%, 3%, around that in terms of interest that they pay for holding your money in a checking and a savings account. I think the minimum should be 5%. Yeah, 5%. 2 to 3%. You gotta look at the rates of a bond. A 10-year bond, you can maybe get more than that. And it's like 2 to 3%. Nobody's really going to hold their money in a financial institution for 2 to 3%. Yeah, that's peanuts. Especially when they're charging us 30% on our credit card balances. Now think about that. You want to charge me 30% for having a balance in your system, but you want to pay me 2 to 3% for me incorporating and giving you a balance in your system. Completely rigged, completely unfair. I get why people hate the financial system. It's fuckery like this. Want to give me 2 to 3% for gambling with my money. Want to take 30% for me owing you money that you're gambling with anyway. Yeah. So I got to pay you about 30% to gamble with my own money. And you pay me 2 to 3% to gamble with my money. Make it make sense. I don't get it. Yeah, it's not like we're both not gambling. They just charge me a different rate to gamble than I want to charge. It's crazy. Crazy, crazy, crazy. 5% interest, you all. That should be the minimum we demand these financial institutions provide us if we have a checkings and a savings account. 5%. No more than 2 to 3%. Yeah. 30 cents to hold $200 for a whole year. Really? I made 30 cents. Who's happy about that? There's nothing in any store anywhere in this country where you can pay 30 cents for it. Yeah. 2 to 3% interest per year on our money. I'm telling you. It should be minimum 5%. I don't really have a maximum for that, But, I mean, that's also why a lot of people are saying, it's not worth it to do banking. Because when you look at anything else, you're trying to maximize your return on investment. And 2 to 3% is not going to do. That doesn't even keep up with inflation. So, hence why a lot of people don't like doing banking. Yeah. They know they're not going to get any type of return on their investment. Yeah. That's not even crumbs. 2 to 3% is not even crumbs. Let's talk about the employees who work at banks. They're not often treated correctly either. Not in terms of what they should be. To me, all bank employees should automatically be enrolled in all rewards programs offered by the financial institution. Yeah. How do you work for a financial institution and you don't pre-enroll your employees in all of the rewards programs? Crazy. Yeah, I've heard stories. That's why I'm bringing this up. I've heard stories. Employees that work for these banks, they said, we tell the customers about all of these rewards programs, but when we come to work at these institutions, we're not pre-enrolled in any of these rewards programs. I said, what? Really? They don't even pre-enroll you in the rewards program, and you work as a representative for the bank, and they won't even pre-enroll you in what their institution offers. Crazy, crazy, crazy. So not only do they not value their customers, they don't truly and properly value their employees. Now, do you think a system like this is going to be sustainable long term? This is why they're having problems. It comes down to value. They don't value the customer nor their employees. And we are the folks that create value for them. Without us, they would have no valuation. They would have no quarterly reports. They would have no record profits, no record dividends for the, stockholders, they would have none of this without us, the little customer, the little employee. And yet they forget this. When the gravy train starts to roll in, they forget all of this. What and how the gravy was made. Yeah, it came from us. But they forget this. So yeah, all the bank employees, in my opinion, if you have rewards programs, you should pre-enroll all your employees. I'm just telling you what I would do if I had a financial institution. People to work for me, I pre-enroll them in all the rewards programs that the bank has to offer. Yeah. 10% if you use this service, 5%, $10 cash back. They would be pre-enrolled in all of that. That way, anytime they swipe their credit card, they're getting points, they're getting cash back. Yeah, they wouldn't even have to pre-enroll in that. They'd be pre-enrolled once they become employees, day one. Yeah. I'm telling you, it would show appreciation for what the employees do. And wouldn't the employees, think highly of that financial institution? Say you've got all these rewards programs, and a lot of financial institutions, they have a shit ton of rewards programs. Travel incentives, auto and home loan incentives, credit card uses, you go to some place like Target or you buy flowers off of 1-800-flowers.com, you get a certain percent back. All of that would automatically be pre-enrolled once you become an employee. You'd have access to every single rewards program the financial institution offers, period. You're now an employee. Your family. Yeah, you gotta think, see, this is why a lot of people didn't want to come back to the office. They had the nerve to try to pretend like these companies were treating their employees with any kind of respect. They weren't. Yeah. You're spending all this energy in the morning, waking up, figuring out what you're going to wear, traveling on the road, and then you get to your job and you get treated like shit. And now, you know what the thing is that they want to say? Try to shame us to come back into these crappy offices. Oh, what about the work culture? A lot of these places don't even do employee of the month. Yeah, when I was growing up, they did employee of the month. If you did a good job as an employee, you would get recognized. There's no value, there's no appreciation for the customer nor the employees. And I'm trying to put that back into the financial system. Because if you appreciate what people do for you, they're more likely to do more things for you. But if you don't show any appreciation, people are likely not to do shit for you. And then that's when you start tanking your reputation, how people go about viewing you, what they put into it, what effort they don't. It's a gradual and steady decline when you don't value and appreciate people for what they produce and perform for you as a collective institution. I'm just saying. So I touched on this a little bit, but as a customer and as an employee, we should all be pre-approved for auto and housing loans automatically. Yeah. Meaning, if I'm already banking with you, I shouldn't have to go to another institution to try to get an auto or home loan. My own financial institution should automatically pre-approve me for it. Period. What the hell am I doing business with you for if I can't go into your institution and get what I need? Yeah, you're telling me I have to go to another institution or enroll? Wait a minute, I'm already a customer. Because sometimes these financial institutions, they'll tell you, oh, you have to enroll in this program. I just sit there I'm just like, wait a minute. I'm already enrolled. I'm a customer. Doesn't that pre-approve me for everything that you do? No, no, no. You have to enroll in this and you have to qualify for. No. Young people, don't do any of this fuckery. They've got this all wrong. When you're a customer of an institution, every benefit that's allocated to that institution should go to you because you are a customer. Meaning I shouldn't have to fight over something if I'm banking with you already. No. Why would I choose to bank with you if I had to fight to get approved for shit? I'm a customer. Now, a lot of times people have to go outside of their financial institution to get pre-approved for an auto or a housing loan because they can't get it through their financial institution. And these financial institutions come up with all different ways to deny you. Oh, your credit score is bad. Child, I'm a customer with you. I don't care if my credit score was 200. Give me the pre-approved loan for the house and the auto. I do business with you. You shouldn't be worried about my credit score. As long as I do business with your institution, that's really all that should count. Because say for instance you do have a poor credit score and you can't get what you want at your institution, so you have to go to another institution. They might not care what your credit score is, but they're going to charge you more for not having an account with their financial institution. So the loan is going to be more in terms of the interest. Yeah. Whereas if you had just done it through your own financial institution, the interest on the loan might have been, minimal in comparison. It's crazy. Completely crazy. So yeah, you all should already be pre-approved for auto and home loans if you're a customer with these banks. It's crazy that they're saying you're not. And this is why these principles have to, emerge. Because they're really, really not they're not treating us as they value us. They're not showing us any value. And that's crazy. Because there would be no banks if there were no customers with bank accounts. I'm just saying. And then the last thing I thought of was more along the lines of financial literacy. Oftentimes it's just assumed that the customer, because they have a bank account, knows everything about financial situations. Now, I'm sure some people might know a little bit about this, a little bit about that, but nobody knows quite everything. That's why you have licensed financial advisors. Now tell me something. All of these financial institutions, they all have licensed financial advisors. Yet as a customer, we don't have access to them. Yeah, I don't even know if the bank employees have access to financial advisors, licensed financial advisors through these institutions. Merrill Lynch. Say you're a customer of Merrill Lynch. They have a shit ton of financial advisors who are licensed. If you're a customer of Merrill Lynch, you probably couldn't access that. Now, do you think that makes sense to you as a customer? You shouldn't be able to access free consultation with a licensed financial advisor? No, this doesn't make any sense. And to that end, I said this should be how it should be running. We all should get at least one free annual consultation with a license, emphasis on license, with a licensed financial advisor per customer, per bank employee. Yeah, one free annual consultation with a licensed financial advisor. Now, that's not much. The reason I didn't say we could get like 2 or 3 is because you can't go crazy with this. Say, for instance, a financial institution has like 15 million customers, 30 million customers. One per, customer, that's a lot for any financial institution. But they have a lot of, licensed financial advisors. And everybody is not going to, in theory, do it at the same time. Yeah. And this would really help out average folks with financial literacy. If you got to sit and speak with a licensed financial advisor for free once per year about any circumstance you wanted to talk about, just because you were a customer of that financial institution, that would really be helpful. Yeah, extremely helpful. We always hear the horrid news about how people, are in debt up to their eyeballs. This is because they don't really have financial advisors to speak with. Now, if you're a CEO, if you're shareholders, those licensed financial advisors are at their disposal. Yeah. But you as a customer, you might not know very much about what to do. And you want to speak to somebody. No. You can't get a free consultation. See, it's little stuff like this that it seems like it's small, but it's ginormous in the scheme of things. Everything that I just mentioned, I don't think any of this shit is being done by any financial institution in our country. Yeah. I don't think it's being done by any global financial institution anywhere. Yeah. Nobody values their customers. They just always think they'll have customers. And so we just get, treated like shit. They don't have to do shit for us. The only thing they say is, oh, we'll insure your money. Okay, I guess. Because as long as it's with them, we can't gamble with it. They can gamble 24/7, 365, 366 on leap year. But as long as it's housed with them, we can't gamble. Yeah. We don't, reap in any of their record profits. When their shares go up, we don't have any shares. They don't even share one share with us as long valued customers, like I'm calling for. Nothing. Absolutely nothing. It's the craziest thing, I'm telling you. And so these are principles for a new emerging world order in the banking system. I don't expect to see these kinds of things done anytime soon with the folks that control the financial system. But in the future, I do think that these things might be, worth looking at, worth investigating, and even worth implementing. Huh? The junk fees that banks were charging, that's been reduced. But these financial institutions, they have to not just, have reductions in what they're able to charge us. They have to actually start providing us things to show that they value us. It's one thing to say, okay, we're not going to take as many things away from you. We're not going to charge you as high an interest rate. It's another thing to say we're going to give you a share of our stock per month, per customer. We're going to pre-enroll you in our rewards programs. Yeah. They have to start providing us things. Not just telling us they're going to minimize what they're taking away from us. That's the way I see it. I don't know about you all.